Good morning, traders. Back into the swing of things. We looks like I didn't miss too much with yesterday's hiatus. Most of the pairs remained extremely range bound with very little activity after the European close. It looks like there was a little bit of a pop in the European before the European markets ended, with Draghi out saying that he considered purchases of 3-year bonds to be in line with basically what he believes he is allowed to do. Of course, the Germans probably were not very happy about this. What we're going to be looking for heading into today, and I guess the beginning of the week, is today we have the ISM mine manufacturing number out of New York at 10 o'clock Eastern time. If that number is better than expectations, we could see dollar strength, because that would diminish the possibility for further QE to be announced at this month's meeting. As going into last night, let's take a look at the Aussie USD, because that was the big news. We had the interest rate decisions out of the Bank of Australia, and the interest rate was left at 3.5%, and the bank just left itself on a wait and see notice. As you can see, the pair moved up from the actual initial rate expectations up towards the 102.80 level. And some people could have gone short there with your stop a bit ahead, but I was actually looking for a move up to the 103.20 level as a possible short opportunity. We could still get that; it could still be in the cards. But a move up to the 103.20 level could find sellers, and we could see a pushback further lower. But there was little to no follow through on the move higher, but that could also be because of the ISM number. If the ISM number is greater, it basically could give an indication of the supply and demand for commodities in general, which could push the commodity currencies around, such as the Aussie and New Zealand. Also, later this week, we have the ECB announcement on Thursday about the possibility of announcing some sort of bond repurchase program, but I'm actually on the sidelines thinking that will be postponed until next week, when they find out from Germany about the constitutionality of any further bond purchase program. Let's go ahead and look through the euros, look through the majors, and see what sort of trades we could have trade setups we have heading into the beginning of the day. I actually posted this setup last night around 2 or 3 in the morning. Anybody that took it, you could have gone short here at the top of the range this is the yearly trend line that has contained the price action. Around 126.20 is when I was suggesting it, right about the high actually. And the pair has moved down now towards the 125.80 level, and that would be actually 125.89 now. That definitely would have moved the trade to break even now, and looking for a push down to 125.60, then followed by a push towards 124.80. And for the rest of the day, it's going to be the same thing. We're going to watch this price action on this trend line, or a break of the 125.60 level for a move back down to the 125.80 for a trend. I believe probably in the longer term that we'll probably get a break at the top of this trend line. So these are short-term scalps. But then again, it could respect one of the two things are going to happen. Is going to have to happen today or tomorrow. We're going to get a break of 125.60, which is going to give us a indication that we could be moving lower, and we'll probably break below this ascending trend line, or we're going to break higher. And if we break higher, we're going to probably be heading up towards the 127.50 level, heading into the beginning of the week. The next pair we're going to look at is the Great Britain USD. It's still trading pretty much like clockwork. At the same time as the euro was testing the top of its resistance level, it was testing its resistance level at the 0.618 fib at 159.04, and then we all know that's the fib from the May decline. What we're going to watch here is the same exact thing. As you can see, the pair bounced off basically the 159.04 level, and anybody that did take that trade should also go break even, because the trade was up almost over 30 pips, and you're first initially looking for a test of this trend line at 158.84.6, followed by a test of the 157.82.50 fib level. Those would be your targets. But in the short term, we're going to watch the price action right around here. We're going to either look for a break of the 59 level for a test of 159.80, and let's look on a daily chart to get a larger view of what we can look at there. on a break of the towards the 159, we want to look at 160.50, but more importantly, we're going to look for this trend line up here, which is coming in around 160, 130. That is the same as the euro. It's a descending trend line that has pushed the pair lower over the last few months, and any move up to that level is going to find significant resistance. So what we're going, like we said on the Great Britain pound, we're just looking for a break or hold. It's basically in a wedge right now. We're looking for a break of 159.05 or a move down below around 158.50. In the Aussie USD, as we looked at before, it didn't get much momentum on its move higher. Now it's a little bit in a quagmire. What we're basically going to watch is the 102.80 level. We're going to look for a break of that level, and it has to be a solid 4-hour, significant break. Actually, more interestingly, I'd be looking for a move up to 103.20, and at the 103.20 level, we're going to watch for a break or a fallback from that level. In the midterm, it's really sitting about mid-range. There's really no trades there that I would be interested in. New Zealand USD, as you can see last night, it broke below the resistance, the support level that's been holding it at 79.70. Based on the price action at 9 o'clock at the 4-hour candle close, it could be an opportunity to go short this pair, looking for a move down to the 78 level. But we'll have to see with the data coming out at 10 o'clock. It might be a hold actually until the 10 o'clock time to find out exactly what we want to do with that trade. Any move down back above the 79.70 level, we'll be back into basically this consolidation zone, and I would wait until the pair either moves above 80.30 for a move back up to 81.84, or the pair could just range trade in between here, and you could play for short scalps, but the risk reward is 60 pips of movement there, and you're going to have to risk 20 on each side. The risk reward, it seems like the risk reward is good, but you could get knocked in and out quite a few times on the same trade. The USDCAD is coming back again down to test this resistance level at 98.40. This level is held once, twice, but it is gradually getting closer and closer to testing again. Third time, there could be a break. What we're going to watch, though, is to see if we get another support here and get a bounce up higher, and we'd be looking for initially for a move up to 99.20, then 99.50. But if we do get a break here, a better buying opportunity would be right here at 98, because if you look at 98 on a bigger chart, 98 is the year-to-date low, and both these daily charts don't look good at all, actually, so I'd be hesitant in buying a bounce right here. Is the year-to-date low, and there should be a lot of buyers coming in at that level, or at least people interested in becoming a buyer. And the yen cross finally, as we can see, the yen moved back down to test this zone that I spoke about in the weekend video, and actually I think I said it on the charts, at between 78 and 78.15. The pair found buyers there, and it moved up as high as 78.44, so it really didn't reach any of the targets we would have been shooting for. But if you are on that trade, the initial target would be 78.50, followed by 78.70, and then followed by the high there around 78.80. So you could scale out of it or get out of the trade all at once at 78.50, 78.70. That is basically a judgment call on your part. Let's take a look at two of the yen crosses, and I expect to make a yen talk trading video today. The EURJPY, just as you can see, it's just like the euro, is in a wedge, descending wedge. So it's either we're going to watch for a break of either 99 or the bottom of the trend line at 98.42. No exact trade right there at the moment. And the New Zealand yen, as you can see, since it's broken this trend line here that we talked about last week, it came back out to touch it. It traded very perfectly technically, and you could have gone short here. It looks like it's definitely its first target. You may want to scale out of the trade right there, or you could hold it for a move back down, break down lower. But once it gets down below that part, there's a lot of free air there, so it could be worth the risk reward. But I would probably lean towards taking profits here after such a steady move lower. And that is it. Watch out for the ISM report today, and of course any news out of Germany or France or Spain, out of Europe, that'll quickly move the markets in one way or the other. Keep a lookout for the Twitter feeds, and keep a lookout for the yen talk. Good trading. Let's make some pips.